If we do start to break down, we take out the bottom of this kind of this rising trend line, we're going to look to retest the 100-day moving average and the 50-day moving average, and those are a bit lower, about 3 to 5% lower. So again, this could devolve into a bit more of a correction here before the election. I'm not saying that's absolutely going to happen, but this is why we go back to talking about risk management in particular, because this is one of those moments right now where there seems to be a little bit of rising risk in the markets, particularly with the sell signal in place. All right, let's talk about what you need to know before the bell this morning. Markets did sell off a bit yesterday. We were down about 90 bips yesterday in the markets. So again, we talked about this yesterday on the show. We remember we're talking about technical analysis and this kind of rising wedge pattern, which is just these kind of rising bottoms that we have going on in the markets at the moment. And so we have these kind of rising bottoms, and then we have these tops that we've been putting in. And so we're kind of, as we talked about yesterday, we're compressing this price level in the markets. Well, yesterday we sold off. We're sitting right on the 20-day moving average, which is just it's kind of this first initial level of support within this kind of rising wedge pattern. So the market needs to hold that this morning. Futures are pointing up. The Dow's up about 33 points right now. So markets need to kind of hold on here. But as we talked about yesterday, the markets have just been kind of consolidating really for the last couple of weeks after this kind of run from that August sell-off. So we had this big run in the market from the August sell-off. Now we've just been kind of consolidating, sold off a bit yesterday. Markets are just kind of in this consolidation pattern. But as we noted yesterday in particular, is that we're on this sell signal and we're working off this overbought condition. So again, we kind of have this setup right now where markets just really can't go anywhere at the moment with any kind of oomph. So we may be stuck here for at least another week until we start getting into earnings season next week. And then once we really get into earnings, it's starting with banks on Friday, but really next week we really get into the meat of earnings season. That'll be the next set of drivers for earnings heading into the election in November. But right now, markets just kind of really seem to be stuck at this level. The risk, as we talked about yesterday, is for some reason if this market does start to break down, which again, seasonally and historically in election years, kind of the mid-month, October 15th through the end of the month, tends to be a little bit weaker spat for the markets historically, just right into the election. People just kind of taking some risk off the table before that election. Could still see some weakness here. So again, if we do start to break down and we take out the bottom of this kind of this rising trend line, we're going to look to retest the 100-day moving average and the 50-day moving average, and those are a bit lower, about 3 to 5% lower. So again, this could devolve into a bit more of a correction here before the election. I'm not saying that's absolutely going to happen, but this is why we go back to talking about risk management in particular, because this is one of those moments right now where there seems to be a little bit of rising risk in the markets, particularly with the sell signal in place. But there's one other thing that's really kind of that's worth watching, and we've been paying attention to a good bit here lately, is that volatility is continuing to rise, even with the markets, as the markets have been going up here over the last, kind of 3-4 weeks and even consolidating a fairly high level. Very quietly, volatility has been rising. And normally when you see a pickup in volatility like this, it normally coincides with market corrections of some sort. Now, that doesn't mean 10, 15, 20% corrections, not at all. But 3 to 4 to 5% corrections are very likely when you see volatility rising, even as the market's going up. It's kind of a precursor to a pickup in overall market volatility, and positioning in volatility options has been rising as well. So again, not a sign that says you need to sell everything out of the markets, but it's certainly one of those signs, kind of like a yellow flashing street light, right? Just something you kind of pay attention to. That's what you need to know before the bell this morning.